So the first thing we're going to do is we're going to look at set up owner statements and go through the how they're set up and what can be in the statement. So under set up owner statements, you notice that I've got a whole bunch of them set up. The defaults when we send out the program are audit, multi-unit, single unit, end of year, and year to date. Those are the 5 that are part of the startup program. When I was doing this, I made up all these different ones so that we can look at them as we go through, and you can see how the screens are laid out and so forth. So I'm just going to go ahead and choose one of them. And we'll start off, you give an ID and a long description to it. The return address can be the management group, or it can be the company, or it can be no return address with the company note and the management group note. The note that goes, we'll look at that in a second, the management group note that you can put in is under profiles if you choose the management group. And in the management group, whatever you have over in this area here on the right hand top side where it says additional letterhead information, that shows up on a statement up in the upper right hand side. When you enter something here, left justify it, and when it gets displayed it will be centered. So you'll see what it looks like when we look at some of the statements, but left justify it here, it'll center it for you. Let me close that. The titles, you can use a different any title that you want for the different ones. Ones that are common are statement and statement in uppercase. It looks pretty good on a statement if you did it so that you typed in S space T space A space like that, and that looks pretty good on a statement. Other people use the word monthly statement, statement of account, and year-end statement. In the increase and decrease columns, the default is increase and decrease. The most common one to use is income and expense. Some people use credits and debits. Other people receipts and disbursements. If you wanted to put it in Spanish, you could go ingresos and gasto. Or if you wanted to do it in Polish, you could do it in dochod and kost. So you can put anything you want in there, and that's what's going to show up in the income and expense headers columns, labels. The body styles, there are a number of different body styles. Before we look at them, what I want to do is go to Help, Contents, and I'm going to look under Statements, under this right there, and the one we're going to look at is Owner Statements Recommended Layout. And under this Help section, there's the recommended layout for the single owner 1 unit, single owner multiple units, single owner apartment complex, 1 owner with multiple properties, end of year, and this is the end of year is the same for all owners. For properties, and it gives you information about that. 1 unit owned by a property, multiple units owned by a property. So all the different ones are there with the recommendation on what most people use. You can end up using anything you want to, but I think the thing you have to think about is you don't want to use the same statement for everybody. You want to use the statement for the owner that makes the most sense for that owner. Some owners may want more detail. Some owners may just want a summary. Some owners like the layout one way or layout a different way. The thing is, each owner can be set up to have the statement style that best suits him, so that when he looks at it, he doesn't have any questions. So when we do training classes, we always ask the question, why do you send owners a statement? And the answer is you send the owner a statement so the owner doesn't call you. That's what you want. You do not want the owner to call you. You send him a statement that makes sense to him, that he understands. So if an owner says he doesn't understand a statement, find out what it is, and then you can probably switch him to one of the other statement styles that will be more suitable for his needs. Okay, so we're going to look at the body styles now. There are a number of different body styles. There's owner account balance, owner account details, owner income details, unit account details, unit account summary, year-to-date, and year-to-date operating system. So these are all the different styles you can use. And what we're going to do now is I'm going to run you through those different styles and show you what the differences are. If you see one that you like, write down what it is, and if we haven't done it already, we'll put the copy of all these statements out on the webinar page of our website, so you can download them after the webinar. So let's go ahead and look at the statements now. So the first one here, let me move this down. Okay, the first one is owner balance details. Okay, so this is the layout of this particular statement is a body style of owner balance details, and what it has, it's got the income and expense and the balance. So it has two columns, income, expense, and it's a breakdown of beginning balance, the transactions by day, and for this particular one, we've got it set up so that it shows the expenses, who the check was written to, what it was for, and who it was to, and what it was for. Okay. Then at the end of the statement, it shows it in date sequence. So the couple of things on this one you want to notice are, notice here's a trash removal. That is an expense. It shows up in the income column because it's a reimbursement of an expense from a tenant. So on this particular style, the owner balance details, a reimbursement from the tenant shows up in the expense column as opposed to in the income column instead of the expense column. We'll look at one of the other statements and I'll show you how it's done differently for that particular statement. Also notice that this tenant here is paying by money order, and over here there were 3 money orders that were paid with 3 management fees. We're going to show you a recommended way to change that, and as you see the difference, maybe you'll want to do it. Everything is in version 6. The things that are not in version 6 I'll mention. A way to consolidate these rent payments and management fee payments are only in version 12. So here we've got the statement, beginning balance, ending balance with all the information. That's followed by the additions. You can list the unpaid bills, the open work orders, a unit information. This one is the balance, which shows the unit, who the tenant is, what the status of the tenant is. This one has rent, security deposit, and any balance that's owed. And then in addition, you can have notes added to it. So a note that came from a work order or an invoice, or one that you put into the notes as appendix statement, would show up in this position here. This one here, because of the way it's laid out, where it says work performed at Fairway Drive, this came from the work performed on a work order that was entered, and all you do is click one button and it adds it to as an appendix statement for that particular work order. Okay, then the next one we're going to look at is the owner balance details, where it summarizes the income and fees. Notice the difference now. The rent and management fees aren't detailed out. They're consolidated. So from an owner's viewpoint, what he's interested in is how much rent he got. The fact that it came in 3 money orders or 3 checks doesn't make any real difference to him. So what we do, we suggest that you do click the box that says summarize fees, and that is over in this spot here on the the setup for the statement, there's a checkbox that says summarize income and fees. For the single unit owner, we said include memos, include payees, and we'll go over these others on one of the other statements. Okay, so this one has income expense, but this is consolidated. The $25, because it's a balance details with the two columns, it still shows as an income as opposed to a negative expense. And then there are the unpaid bills and so forth. Now, in most of the rest of the statements, I didn't include the appendages because what we're after is what the statement looks like. There's also an owner balance summary, and that consolidates the transactions for the period that you've chosen. So it's the total rent, the total plumbing, the total lawn service in two columns, and on this one I made it increase and decrease. Then the next layout is owner account details as opposed to owner balance details. And under owner account details, there are three columns: income, expense, and other. And notice that the $25 trash removal shows up as a negative expense. So one of the decisions you make for single family or single unit owners, or when you have a detailed statement, is whether or not you want the reimbursements for expenses to be included as a negative expense or shown as a negative expense or shown as an income. The majority of people we talk to feel that it's easier for the owner to understand the income as opposed to the negative expense. At the end of the year, when you run your end of year report, the negative expense and the expense itself are all rolled into one, so there's no breakout at the end of a year statement. This one has the rent and the management fees detailed. The next one is the same one, owner account details, and we summarized the income and fees. So you notice how much cleaner it is. And yes, I am trying to convince you to do that when you're on version 12. Okay, and then there's the owner account summary, has the three columns again. The next group is owner income details, summarizing the income and fees. We just did that. Okay, this is income details, and what it does, it lays it out differently. Instead of the income and expense being across the horizontally, the income and expense are vertical. So all the incomes are in the upper portion of it and followed by the expense. And followed by other income, followed by other expense. The advantage of running a statement like this is the owner then can see what the cash flow, the real cash flow is for the particular unit. And so it's only the income and expenses that are counted into the cash flow of the unit, and then the other expenses and cash distribution are outside of the cash flow itself. Some people add mortgage payments into it. If that were the case, you would make mortgage an account type of expense as opposed to making it an account type of other expense. Okay. The next is the same one, except as a summary. So here's the owner income summary, and it's laid out with the income summarized, the expenses summarized. If the owner doesn't want a lot of detail, this is a clean report to give to them. The next has to do with units, where you've got multiple units. And so you have unit balance details. The unit balance details takes and breaks it out into the word balance means that there are two columns, income and expense. The word account means that there are three columns, income, expense, and other. So this is a unit balance. So it's got the two columns. It shows the owner's transactions to begin with, which would be cash contributions, cash distributions. Then it breaks out each of the units and has a detail of all the transactions that occurred. So here are the transactions for Cedar Lane. Here are the transactions for Fairway Drive. So if an owner is a multi-unit owner and the units are pointing to the owner as their ledger, the setup would be the owner unit balance details report would be the recommended one. Okay, here's the unit account details and summarize the income and fees. So it's in 3 columns. The rent and the management fees are consolidated and it's broken out by unit. As we're going through these, if you notice something that you think is good, write down the name of it, the name of the style, and then try it out at your place to see if the owner's statement looks better one way or the other. The next one is unit account summary. The only difference is the daily details are not there, it's summarized, broken out by unit. Okay. So this is the recommended report or statement for an owner who has multiple properties. It has 2 parts to it. It has a summary and a detail. So the first part of it is the owner balance summary, which breaks down the income and expenses and summarizes them for all of the owner's units. And notice this is one where I put the statement with the spaces in between. So when you look at one of the following ones, in your mind you can say which one of them you like better for your use. So the summary is then followed by the detailed transactions, and the detailed transactions are the one called unit balance details, broken out by unit, by transaction with the 2 columns. And then unpaid bills, all those other things that go with it. Okay, so here's a multi-unit statement. If the owner says to you, I want a statement and I want each of my units to be on a separate page, then what you do is on the layout you mark down new page for each unit's details. And then what the statement looks like, it has the summary, then it has a new page for Cedar Lane, a new page for the next unit, Fairway Drive. And so that's what you do to get a statement where it's broken out by page by unit. Okay. One of the other layouts that's possible is a year-to-date operating statement. A lot of the people that came over from Yardi DOS and Yardi Professional, they were used to a statement like this, and so many of them still use that. This one breaks down, it summarizes everything, gives you the current month, and it breaks out the income and expenses. This is closer to a standard financial report than some of the other owner statements are. And it has a current and year-to-date, broken out by expenses or income, other income, expenses, other expenses, and then the adjustments are the cash distributions and so forth. Okay, there are then statements that are called year-to-date statements. This is a year-to-date operating statement, and what it does, or this is an operating statement which shows the current year and the year-to-date. The operating statement, what it does, it has a beginning and an ending balance. I'm sorry, this is the end of this one. Okay, the next one is owner balance details, no additions, and exclude the notes, which is what's considered to be an audit statement. This is one of the standard ones that we put out when somebody buys the package new. And what it does, it allows you to go back and look at what happened over a longer period of time without seeing all the details of the check numbers and who it was to and so forth. In this case, you're trying to do an audit, you're trying to figure out what might have happened or when something was changed. Like for example, if somebody went back in and voided this mortgage payment back on 1/1, that then would cause the balance down here to be lower than it should be, and you'd be able to see where a change was made, and something might have happened, so you can do further research. And that's called an audit statement. And generally it's run for a longer period of time than the monthly statement. Okay, the next one is the yearly statement summary, and this is the one that you use for end of year. The date range is January 1st through December 31st. It's a unit balance summary report. That's the body style, and it breaks out each of the units and summarizes their income and expenses. This is the one we recommend you send to everybody, whether they're single unit owners or multi-unit owners. Okay. This one is one that we called all description options, and I just want to show you all the things that could end up on the statement. So here is the mortgage payment with the payers and who it was from and where and the unit that was involved and the memo and so forth. So this is a situation where what you would do is you would have marked, include the unit description, include the payers, include the payees, include the memos, and then all of that information shows up on the statement. So in general, you would include payers, and if you were running a detail of an apartment building and you were running details of when things happen. So we would say who the money came from. And it's used more by investment managers than it is by fee-based managers. Including the unit description, same thing. If you're doing detailed transactions and you're not doing a unit style, then you could put in the unit description. It would say for whatever apartment it is or for whatever unit it was for. The only time you do the exclude notes is when you do the end of year statement. Then you wouldn't want all the notes appended to it for the whole year. Okay. All right. On the additions page, there's a unit tenant list options. There are 4 of them. The balance summary includes the unit and lease descriptions and the status, and also the rent amount, the security amount, and the balance due. If you choose lease expirations, you get rent and the lease end date. If you choose lease summary, you get rent, security deposit, and a lease end date. And if you choose security deposits, you get rent and the security deposit amount. So those are the 4 ones that you can choose from on the additions tab where it says unit tenant list. These are optional. Not a lot of people use it. Quite honestly, I'm not in love with having the lease expiration date on a statement. I'm not in love with having the security deposit amount on the statement. Both of those generate questions from owners. For the lease expiration or the lease summary, the owner is going to say, you know, it's April and the lease is going to expire in June. So the owner has to call you and say, or will tend to call you and say, what's happening? Is the tenant going to renew the lease? Do you have anybody else that's going to come in? With the security deposits, they'll turn around and say, I want to spend that money for something, which they can't do. In some states they can, but in most states they can't. So in general, I'm putting these things on the statements. If somebody asked me, I would say only if the owner says that he wants it. That's about the only time I would use this or recommend using it. Okay. The other things that can be added to it are a balance message relative to the distribution reserve, which is the most common one, or the base reserve, which was uncommon, and also the invoice list. And this one I think should be on all of them. If you don't do work orders, then all you do is have the unpaid payables. If you do work orders, then it should be unpaid payables, and the open work order should show as appended to the statements. Okay, so these were the ones for the tenants. All right, now here's an example of a statement that is that has the deficit message on it, and the deficit message goes up and is in a different color, and what it says is, in this particular case, please send this much money to bring your balance up to the required minimum of the base reserve, and this number here, this 258, includes 8380 of unpaid bills. So to bring the balance up to the base reserve, it will indicate to the owner that he should send enough money to cover the unpaid bills plus whatever else is needed to bring you up to the base reserve. And then the rest of the statement's the same. Okay. This is a year-to-date income statement, and there are 4 year-to-date statements. There's an income statement, a retained earnings statement, a cash flow statement, and an operating statement, and they all are laid out a little bit differently, and these same things go for the consolidated statement as well. So over on the setup on tab number 1, here are the summary styles. And so what we're going to be looking at are these 4 here, the year-to-date and so forth, and the consolidation style, and we'll talk about that in a few minutes. The layout of what's on there is the same, and it's different based upon whether you choose cash flow, income, operating, or retained earnings. Okay. So this one is the income statement. The income statement is what it has. It's got no, get to my notes here. Okay, the income statement has no beginning and ending balance. It doesn't show equity nor liability accounts. Equity account being the cash distributions and cash contributions. So it's strictly income and expenses. It summarizes all transactions by account type and breaks it out into current and year-to-date. And the breakout is the income, the expenses, the net operating income, and then other. Other includes other income and expenses. The next one is the year-to-date operating. And year-to-date operating has a beginning and ending balance. It summarizes all transactions just like the other one. And it includes the equity. It does not include liabilities. Okay, so and it's broken down by income, expenses, other expenses, other income, other expenses, and then adjustments, and adjustments being the equity ones. The next one is the operating statement. Next one, that was the operating. The next one is the retained earnings. And either operating or retained earnings are the ones that we would recommend using for fee-based managers. The year-to-date retained earnings has beginning and ending balances, does the same summarization of the transactions, and it breaks it out into income, expenses, and other. Other being other income, other expenses, and the adjustments. So this is the one that I personally like the best for fee-based management because it doesn't have as many breakouts to it. Rather than having other income, other expenses, and adjustments, it groups them all together into other. And then the last one is one which is the cash flow. The cash flow has the beginning and ending balance. It includes, the thing that's different about it is that it does include the equity, but it also includes the liabilities, which are open credits, security deposits, and any set-asides. So if you set aside money for an owner, it doesn't show up on any of the combined statements except for the cash flow. So it has income, expense, adjustments, and it includes the security deposits. Okay. For the consolidated statements, when you look at those are the ones that you can choose for consolidate. Now what's meant by consolidated is that you have an owner who basically has no transactions and he's got properties. The one I'm going to show you is an owner that has 4 properties, a duplex, a fourplex, and 2 single-family units. So the setup, the way he's got it set up, is there's an owner and then a property for the duplex, another property for the fourplex, and another property for the first single-family unit and another one for the second single-family unit. Okay? And what you would do then, you would choose here as to what the consolidated is. Now this is new to version 12. Before, in order to get a consolidated, you had to run a financial report consolidated for that particular owner. So what it looks like, and there are the same things: operating, retained earnings, cash flow, and income. The one I'm going to show you here is the operating. It has the beginning and ending balance. It's got the breakout of the income and expenses current and year to date. And so this is what would show up on the owners for the consolidation of all the owners' properties. Okay. And then it's followed by the twoplex. And the twoplex has a unit balance details, and it's got a breakdown of each of the units and the ones that are against the ledger itself, followed by the information about it, and then the fourplex break out the same way, all the different units, followed by the first single family unit, and it's got a owner balance details, followed by the second one, which is owner balance details. And that then was the statement that the owner would see. Now when you set that up, the place that you set it up is over in the for the consolidated for the owner, the one that's assigned to the owner, which is consolidated, is okay. Let me show you something too that's in version 12. Under setup, there are user settings, and you can keep the find list active. And what happens then is when you go look at something on the find list and save it, it takes you back to the find list. Okay, so I'm going to go to the profiles. First I'm going to look at the owner statement, and there should be one called consolidated, unless I didn't save it. I didn't. Okay, so to set up one that's called consolidated, what you would do, you would give it the name consolidated. I'm not going to type the whole thing out. And you do the return address, management group, that's normal, the title, the increase decrease label. None of these in here need to be marked. The only thing you have to choose here is the one that you want, and if you chose the one for retained earnings. And then what you would do is save this and assign it to the owner. So over in the profile for the owner, you go to tab number 3. Let me pick somebody else. Pick tab number 3, and over in checks and statements, where in version 6 there was nothing in here before because it uses the properties, you choose consolidated. And that then would cause this owner to get a consolidated statement which would reflect the sum of all the transactions in all of the properties. On the property side, under Profiles, Property, the owners that get statements, here's the list of owners for the property, and each of them has a statement type, there are 4 choices that are operative: combined owner, combined property, separate owner, separate property. The combined owner means that it's going to use the statement style that's in the owner profile, and it's going to have the statements following one right after the other, no page breaks. The combined property says it's going to use the statement style that's in the property profile and not do page breaks. The separate owner says it's going to use the owner's statement style that's in the owner's profile, and the pages, when it changes property, it's going to separate the pages, start a new page for each one. So the most common one to use with version 12 and with the consolidated would be the separate property. When you use, say, the separate property, then it's going to do for the owner whatever the owner's style is set up to be, and if it's set up to be consolidated, it'll do a consolidated one of all the properties for that owner, and then it'll do for each of the properties whatever is chosen for that particular property. This one's set up to be the one set up for an apartment building, or it could be, if it was a duplex, it would be the one for that would have unit balance details as a style. If it was a single unit, it would be the one that says single owner, which does owner balance details. Did I want to do that? No. Okay, so that's what the consolidated one is. Then when you deal with, here's a consolidated income statement. It doesn't have the beginning and ending balance. Here's the consolidated cash flow, and it's the one that has security deposits, current liabilities, and things like that, and the adjustments part of it. Okay, if you're dealing with an apartment building, then you might set it up so that if it's a details that the owner of the apartment building wants, you would include the unit description, so it would say rent for Willowbrook 203 instead of just rent. So each of the transactions are identified as to which one of the units are involved. That's if you do the statement style that has the detailed transactions on it. Okay. This is an apartment owner details broken out by unit. So when you break it out by unit, you don't have to say rent for whatever it is. You say this is Willowbrook 201, and here are the transactions for Willowbrook 201, 202, 203, etc. And then another alternative is a summary. So that's the breakout of income and expenses. This is a income details, income in one section, expenses in the other. Some apartment owners or owners of apartments want to look at all the units they got rent from, and it's therefore puts it in one place. And lastly, here's the apartment with the units on separate pages. So here's Willowbrook 201, page break 202, all the way through the different ones. And in order to get that layout, as I mentioned before, you would mark the checkbox that says separate page for each unit. Okay. All right, back up to here then. So you can see that those are all the different layouts for the owner statement, and what we looked at were all of the ones that were in here, and the breakdown of all the different things you can have relative to it. Okay, so how can you then get the statements out to the owners? There are a couple of ways to set it up. Over in the owner's profile, If we go to one of the owners on, that's a note. Okay, on tab number 3, there's a section for publishing. There are a number of different ways to get owner statements to them. One, you can print them and mail them. That's was used mostly in the past. For now, there are better ways to do it. You can publish, which means you put them up on the owner's portal with Promise Central. You can publish and also have a copy sent to the owner via email at the same time it's published, or you can just email. So those 4 choices of ways to get a statement to an owner. And where you set up the parameters to identify how each owner should be handled, in the owner's profile, you have the section for publishing. The default for an owner is publish. You can say copy to email. That means it's going to publish and also send an email copy to them, a PDF attached to an email. You can say send by email, and then it'll just send by email. It won't publish. Okay? You can say I don't want any paper statements, and if you do that, it'll never print a paper statement for him. If you say no internet statements, then it won't put his statements up on the internet. Now, you do want to, I would recommend that you upload statements to the owner's portals, to their accounts in Promise Central, even if they don't have an email address. Because it doesn't mean that one day they aren't going to have an email address and then you'll have all their statements and documents sitting up there for them. It doesn't take any more effort to have them sent up there. So the only time I would do the no internet statements, the only time I'd mark that checkbox, if the owner specifically said, I do not ever want any of my information about my properties being on the internet, then you would mark off no internet statements. But other than that, let all the statements go up, and then if the owner never ever goes up there and does it, if the owner calls and has a question about a past invoice or a document, you can go up and you or the managers can go up and look at it so you can see what it is and answer the question rather than coming back and looking through somewhere else. All the information's up there. Okay. There's a publish until date for the owners. So if an owner terminated his management agreement with you in July, all his statements are still there. If you make him inactive, it stops giving him access to Promise Central. So to continue the access to Promise Central, you might say that you want to have him be able to look at his statements up through 2/28 of 2015, so that if or when you stick up the annual statement, or if you stick up a substitute 1099 or anything else you want the owner to see, he can still see it up until that time, and he can look at his old statements until then. That way you don't have to handle him any differently than you do any other owner. Okay, let's see the owner's profile. All right, so one last thing. How do you get the managers, or how do you look at something to review the statements before they are sent up, if in fact you do review them? If you do that, the way to do it would be to over in mailings, owner statements, and this would, we just run it, put the date range of what the statement range is going to be that the owners that you want to be reviewed, and then you click on publish, and you want to publish it to either a file copy if it's just you, or to the property managers if the property managers are going to do it. So we'll do the property managers one and run it. And now what you end up with is a PDF document that's going to get created. If you do it to your managers and then you email them, they can be emailed to the managers. That's the default for managers, is emailing. So there were 3 managers. Those 3 PDF files are in the publishing folder. And once they're in the publishing folder, in the upload manager, or the manager can go into his profile and look at the upload manager as well. But here's Emma Bull, and if we open up that statement, this is what would be emailed to her or given to her. And here are the statements for all of her owners: Carl Cheek, Fred Clayton, etc. Now, based on the training classes we had over the last month, the recommendation at the last one is that we separate these out by page. Right now they just run one after the other. So these will be separated by pages. Okay. So that's how you would get things to the owners or to the managers so they could review it, and then the review would be made, then it would go back up. One other thing, if you make a mistake on a statement that you publish, you can regenerate the statement, and when you regenerate a statement, it replaces the statement that is up there. So when you find a mistake, you fix the mistake, you regenerate the statement. When you publish it, it replaces the one that's there. Okay, so I hope everybody found something in the owner statements that they can use for some of their owners. Come back to the same thing. You send a statement